Well, good morning. We've had a down week so far, but this morning looks a little brighter this Friday morning, Friday the 13th. For within the first 10 minutes, the market is up. China reported last night their GDP, which came in, this is for the second quarter, came in at 7.6% growth, and it was expected to be about 7.5%, so it came in line. But there were some, if you look deeper into that report, there were some little bit of bright spots. Housing prices rose a little bit, construction was up a little bit, and it looks like that this looks like the weakest that they're going to become. It looks like for the rest of the year, things are set for them to expand. Remember, they lowered interest rates twice in June. They have announced a infrastructure project, over 100 different infrastructure projects in China, and I don't think they're done. They're going to announce more. They're going to spark growth, and that growth is going to help everybody else, including Europe. By the way, everybody is so down and out about Europe. I'm starting to feel that maybe we're going to see some better than dire news out of Europe. I'm not saying great news, just better than the dire news we've been seeing everywhere. In the U.S. this week, we had some decent economic numbers. No one's paying much attention to them. The one that I thought was most important was that the consumer credit in the U.S. jumped to $17.1 billion. Now you probably don't realize that if that's a lot or not, because what's 17.1 billion? Well, let me put it this way: that is two times the expected amount. Two times. The experts expected 8-9 billion, and it was 17 billion. Now this is credit across all factors. We're talking about credit card, home loan, car loan, all of them. Now, it's not necessarily good news that we borrow a lot of money, but it certainly is good news for the economy. Long term, you don't want you don't want the consumers to be indebted too much, but we have been on a deleveraging slope for some time, and this indicated a re-leveraging uh, to some degree. That's going to help our economy. Just be sure you realize that. Jobless claims fell 26,000 this week. That's a leading economic indicator. Fell 26,000. People applying for jobless benefits fell 26,000 to 350,000. The experts feel that that was not necessarily that's kind of a temporary thing. The reason being is that during the summer, many auto factories retooled, they shut down, and therefore unemployment claims go up, and that didn't happen so far this year. Well, why don't they take the opposite effect? Maybe the auto companies didn't shut down for retooling because demand is so high and they can't. They got to keep pumping cars out. They didn't. Why isn't that just as valid as the other one? That argument, I don't know. Anyways, the market's fallen 6 days in a row, not counting today's up day so far. Actually, I'm amazed that the market's held up this well. I'm surprised that we haven't had a bigger correction yet with all the dire news. Now, I want to point out that the news isn't that bad. It really isn't. Yes, our economy slowed down. Yes, Europe is in a recession. Yes, China's economy slowed down. But if you just step back a minute and look at, well, what's happening to address these issues? The U.S., even President Obama, is offered to extend the Bush tax cuts. Of course, he wants to do it for the non-rich, and there's going to be arguments. But at least they're looking at trying to address the fiscal cliff that's coming. Europe is now not talking about austerity nearly as much as it's talking about how do we stimulate our economy. China is already well on the path of stimulation. We are well on the path of stimulating our economy. QE3 is much more on the table than it was just a week or two ago. Quantitative easing 3, I don't know, it just seems like there's going to be a massive effort to try to re-inflate economies. And if that, I don't think we should fight the Federal Reserves of all the countries in the world, because they're all trying to do that. At some point, that's going to work, and that's going to be very positive for the stock market. Now, during the summer, we'll probably get another correction. I'm not doubting that at all, but the corrections are probably not going to be that big. Just don't think so.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.